What is the biggest structure high and the biggest structure low, and how can it improve your day trading futures using the 1 minute chart? So first of all, my name is JT and I have a trading school, and students inside within the first 3 to 7 months made it to use a not real money account with $3,000 to make the first $400 to $1,200. As you can see here, I'm blending them in, and using the biggest structure highs and lows is something what is very awesome trading the S&P 500 futures, because the market is usually aiming for these at its session time. That means 8:30 a.m. to 4 p.m. It depends on where you live at what time zone. It's just between 9 a.m. to 4 p.m. Somewhere 1 or 2 hours there is totally enough. Later on, they will extend even this trading hours for those people that want to trade at night, for example, or after 4 p.m. What is going to be awesome, but this is not out yet. And the thing is that when you look at the market and you want to know what the biggest structure high and low is, just imagine that the market is an auction process and you have sellers. That means up here, for example, you have sellers because the market was going down. And then people are taking profits. That means they want to earn money. That means they need to buy because they sold. This is how trading works. And now you have people, they sold up here. They have their stop placement up here, it's called. And you have people that bought down here and they have their stop placement down here. So now it's a fight in between. Does the market wants to go now up here or down here? One of these people needs to lose money so other people can earn money. This is how an OTC business is working. It means over-the-counter business. It means literally day trading. It means if somebody makes money, somebody also loses it. But don't worry, you don't only have private people inside that you would snitch money from. You literally have businesses inside and they have enough money, they can afford a lot. And for a lot of traders also, it's not just when they enter the trade or exit the trade, not about the profit on the speculation itself. Sometimes they also want to pre-order things. That's why it's called also futures. So first of all, when we go here to a 1 day chart, this is something what would help you out so much. Because when you just look at the current candle, that means here the highest and the lowest point are always the wicks. And you use a horizontal line and you place them on these wicks from the past, let's just say 3 days. And this will help you to understand what are the biggest structure highs and lows, because there are very big people in the market. They only trade the 1 day chart and they just look for these references. These are the most powerful references that you see here. When we now go to a 1 minute chart, this has something to do with money management, because for example, to adjust $100 to make $500 is very important. Then you can see here now the biggest structure highs and the biggest structure lows. That means here, for example, you see a biggest structure high. Down here, you see a biggest structure low. Here you see another, as you see here, you see a biggest structure high, right? I'm going to place this one, by the way, here like that, and you can see this one. And here is a biggest structure low. This is from yesterday, as you see here. And then we have also the one from before. This one here was the biggest structure high. And this here was the biggest structure low, as you see here. So when day trading, maybe most will think, oh, let's just take here some highs and lows here in the middle. But this is not that much important, I think. I think what is more important is when we have a bigger structure high, did the market reach it already? And yes, the market was going through here, as you see here. And there was this huge gap because this was overnight, what was very brutal. And every time the market is going to a bigger structure high or low, there's just a small push in the same direction, and then the movement is usually finished. As you see here, here's a bigger structure high, here's a bigger structure low. Now the market goes up and cannot reach the biggest structure high. So this shows us already that the market has weakness, as you see here. The market is just going here to medium structure highs, as you see here, there, and there. If you don't understand yet how I'm drawing in these lines, then just take, instead of candles, just a line-based chart first, the 1 minute chart. And as you can see here, you see now structure, how the market is literally, I'm just drawing in this one in for you, how the market is doing this one. I hope that you can see this one here, right? It does like this. So we have 1, 2, 3 smaller structure highs, and this is what the market is aiming at. And we want always to make sure or see that the market is going to this bigger structure high up here or this bigger structure low up here. And if the market cannot go to this bigger structure high, then guess what? The market will go to the biggest structure low. So these bigger structures is always a key reference. This is something what is very important that you understand it. And if the market cannot reach one side, the market will go to the other side. Let's just go back to the bars or candles. Candles is something what is very important, because when you use Renko charts or other charts, it's just not showing you the movement, what the market does. But this is something what is very, very important. So now what you see here is that the market is reaching here the biggest structure low. and then it pushes up, as you see here. It goes to the smaller structure highs here, and then when it goes that strong up, usually we should expect that the market is going now to the bigger structure high. But guess what? If the market couldn't reach here the bigger structure high, as you see here, couldn't reach here the bigger structure high, but it was able to reach the bigger structure low, it makes sense that maybe the market can still not reach here the bigger structure high, that it makes sense that if the market is going down, that later on when the market is going lower here, that it makes sense that the market is touching the bigger structure low, or when the market is more near at this high, it needs to be very close up like it was here, for example, right? Like more higher here. Then it maybe makes sense that the market wants to go to this bigger structure high. I see some beginners, they try to draw in highs from here or from here. But the thing is, you need to imagine now is when people have sold in this area here and they have their stop placement here, they're already out of their trading positions. Of course, this high is still reacting also on the right side, but it's just not that relevant anymore. And for that reason, what is very important is to use always a bigger structure high that has not been touched, or a low here, as you see here, that has not been touched too.